Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with you all this morning. Seth Udinsky, Samuel Case, and Mark Manila. Mark, it's great to be here, brother. Good morning to you. Excited for the show.
Good morning. Yeah, very excited. Good morning. Good morning, all you Christian investors out there. We're glad you're joining us this morning.
Yeah, certainly are. We want you to join the conversation as well, folks. So you can call in at 610-363-1110. Our phone lines are open, and they'll be open for the next hour. Please call in. We'd love to talk to you. Even folks, listen, if you've got opinions that maybe disagree with us, we'd love to hear from you. 610-363-1110. Mark, I questioned whether I should even bring this up, but I think our listeners, at least most of them who are not new to the show, but they've listened to the show for a while, might have a slightly different opinion than I do on Social Security. We're not going to talk about Social Security today.
No way.
But that's okay. We have different opinions on that stuff.
Well, now we might, since you brought it up and you're asking people to call in. That's a can of worms, Seth.
Seth, you're an idiot. No, 610-363-1110. If you've got questions, we want to hear them. 610-363-1110. We'd love to talk about it. You know, Mark, I think it'd be worth it for us to mention this as well. We've got less than 2 days left on our petition that we're trying to bring forward to Nvidia to tell them to stop funding transgenderism with shareholder dollars. Tell us about this, Mark. Why is this so important?
Yeah, it's so important because we need the Christian voice to be heard. It's only the Christian voice that keeps this country from just decaying into to destruction. So let's make our voice heard. Let's let Nvidia know. We want corporations to be corporations doing what they're supposed to do, and that's good business, and not trying to engineer our culture or our society or manipulate people for reasons we don't even understand to destroy it. So let's let them know we don't want our children mutilated. We don't want to make it common that it's okay to give kids drugs that stop their development. We want them to step back and do what they do best, and that's make chips and work with AI and whatever else they do, but stop engineering our culture. If we can get them to wake up to see the light, then maybe we could hit some more companies up as well. This is phase one, Nvidia.
Amen.
Join us.
Yep. Folks, go to financialissues.org. You can get the petition right there. It's the big green arrow at the top, a big green bar at the top of the screen. Just click on that, take you right there. I did put the link in the chat as well. You've got about 36, maybe 38, 39 hours or so to sign this petition before we gather all the signatures and we send it over to Jensen Huang. We want to surround this with prayer and with your signatures as well. We believe we can make a big impact, so let's do it together. All right, guys. So yesterday, the big news, obviously, was the Federal Reserve has cut interest rates by 1/4 percentage point. Mark, I'd love to hear your thoughts about this. But first, Sam, give us the details. What happened yesterday? The big news of the day, as it was.
Yes, as you said, in a widely expected move, the Federal Reserve cut interest rates by 1/4 basis point, while the Fed also said it will end its balance sheet reduction known as quantitative tightening on December 1st. Fed Chair J Powell says the decision to reduce rates reflects a cooling job market, even as inflation still stays above the Fed's 2% goal. Here's Powell.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
Stocks rose right after that announcement, but the S&P 500 and Dow later turned negative after Powell said that another rate cut, a foregone conclusion.
Interesting. Mark, what do you make of this?
Well, I remember one time I was at a conference and there was this guy who did a gobbledygook economic thing. It made absolutely no sense, and it turned out he was introduced as this big economist, but he was really a comedian, and he said absolutely nothing. Every time I hear Powell, I hear that comedian. He's saying absolutely nothing. He's saying quantitative tightening. They're going to go into stop quantitative tightening, yet Why? And then you're going to lower an interest rate. I mean, they conflict with each other.
Mark, just for sake of conversation, can you explain the difference between quantitative tightening, quantitative easing? What are those things, and what causes the Fed to make those different decisions?
Well, I can't tell you what makes the Fed make those different decisions because they haven't made sense for quite a few years. But I can tell you,
gobbledygook, right, Mark?
Yeah. Quantitative tightening is when they start removing money from circulation. Quantitative easing is when they pump it in, like when Biden and the Fed and the Treasury pumped in, what was it, $4 trillion all at once, the largest amount of money ever dumped into the markets, the United States at one time. Creating it out of thin air is what it comes down to. Quantitative easing is actually adds money to the economy. Quantitative tightening removes it. That's the easiest way to think of it. How that goes about is very complicated. They say it's easy. Well, the Fed just stops buying government bonds and that kind of thing, or starts buying on the other side. So it sounds easy, but then wait a minute, where'd those government bonds come from? Obviously, the Treasury's involved. So now you have the Feds, the Treasury, and of course, then you have Congress. All this has to come together, working together to make this all work on whether we expand the money supply or contract it. Quantitative tightening is contracting the money supply. That's what it's supposed to be. Bottom line on that. So I guess he's doing that because usually when you contract the money supply or remove money from the economy, interest rates start going up because there's less money to lend to the same amount of people or the same amount of entities. So he lowered interest rates and tightened. It just doesn't make sense. Anyway,
I think is he ending tightening? I think that's what's happening. If I'm reading this correctly,
he is ending tightening. But what that means then is, are they going to continue to buy government bonds, which would expand it, or how do they go neutral in this? I don't. That's something he didn't explain. So I get it. He's got a few levers. He's trying to pull them, and maybe he is trying to do the right things, but I think if they just get out of the way, let the markets do what they do, let the economy do what it's supposed to do, we might have a less of a roller coaster. But then there'd be less control for the Fed, less control for the Treasury, less control for the government. But we got to play with it. So there it is. It's a reality right now. As long as we have a Federal Reserve and as long as the Treasury is able to produce more and more bonds. By the way, adding money to the economy is just creating it out of thin air is what the bottom line does. Mm-hmm. Removing it from that is pretty much just putting it on the balance sheet of the Federal Reserve then. They say they're selling these bonds. One of the way the Fed says that they tighten things is they sell the bonds off that they have bought that put money into the market, which means they get cash into the Federal Reserve, which means their balance sheet just grows. Or they let the bonds that are maturing, they don't buy new ones from there, so they don't.
Can you also explain how it makes sense that the government can buy bonds from itself? How does that actually work?
The Federal Reserve isn't the government, is it?
Right. Well, so they say.
So they say they're an independent organization.
Now we're getting into the loop and the craziness of it all. Yeah, it's very crazy. But anyway, so I know that made mush out of the explanation of it all. But the bottom line is what he's saying by ending quantitative tightening is that they're removing money from the economy. I guess that would be the best way to say it. They're stopping actively removing or reducing the money supply.
610-363-1110. Mark, grateful we have you here to explain that stuff to us. The major indices, of course, reacted yesterday, as they often do. They began the day feeling strong. Sam and I were keeping an eye on them. They were feeling great, actually. Fresh new records, looking for the third or fourth record high day in a row. But then after the Fed cut rates, they seemed a little bit tepid, I felt like. I guess they didn't like what Powell said. Maybe, Mark, the markets actually also were like, wait a second, that's just a bunch of gobbledygook. It doesn't make sense. We don't know what to do. And sure enough, that's kind of how they finished. The Dow Jones ended up down. The S&P 500 was flat. The NASDAQ, ever full of resolve as it's been, was still positive, about up a 0.5 percentage point. But this morning, the markets have at least the pre-markets, that is, trending downwards. We saw some big tech earnings that they weren't entirely too pleased about, though I'm not sure how much of that was from the big tech and how much of that was just leftover from yesterday's Fed meeting. But right now, the Dow Jones, the S&P 500, and the NASDAQ all priced in to open nearing right around a halfway percentage point in the negative. So we'll see how that happens, Mark, in just a few moments here. But once again...
Yeah.
I'm so glad that we have.
It is interesting when we see the markets that are overvalued the way they are. What happens is any news seems to give a reason to take some profits off the table, and I think that's what we're seeing here.
Sure. So nothing to be too worried about then.
No.
Good stuff. 610-363-1110. We got a couple calls in the queue. We'll get to you folks. Stephen and Linda, hang on. We'll get to you guys coming on the other side of this break. We're grateful for each of you joining us here on Financial Issues, and we got a lot more to talk about. 610-363-1110. Join the conversation. We'll be right back.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Are you tired of chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month interest on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
Well, 610-363-1110, folks. Today's show brought to you in part by our friends at Samaritan Ministries. Can't say enough about Samaritan Ministries and the work that they do to protect your health care dollars. You know, not only, Mark, is it the joy of being able to come together as Christians and support each other and pray for each other, but you're also knowing that the money that you're spending on not only your own health bills, but also in sending your shares, the health bills of other people, is not funding wickedness like transing children or funding abortions or other things like that. Just such a good thing that we have with Samaritan Ministries.
Amen. Praise God for that.
Absolutely.
And them.
Check them out at SamaritanMinistries.org, folks. You're going to want to do that today. We appreciate them so much. 610-363-1110. We got a couple calls in the queue. Mark, let's get to Stephen calling from the great state of Texas. Stephen, good morning. You're live on Financial Issues.
Hello. You can hear me, right?
We got you loud and clear,
Stephen. Yes, can hear you loud and clear.
Okay. Sounds good. I've got a couple of questions. I recently implemented, based upon a response from you to a call, to a write-in question of mine a little over a month ago. I implemented the growth and income portfolio, suggested portfolio on top of my my cash stash. Now I have a couple of questions therein. I put some balance in there, but I'm looking. You have one category there, and I don't know if I should say this on the radio. But you have one category there, and it represents about 8%. Your target allocation is 4%. I'm sorry, 4% of the suggested portfolio. There is only one stock on the buy list that is part of that category, and here's the thing. I am willing to go up to 4% on that one stock because I look at the stock and I love the numbers, but I do wonder if that breaks the spirit of what you're trying to do.
It really doesn't. Remember, 3% is what we normally say to start a new position. Give or take a percent is not off the table there. So it has to be balanced every now and then. So you're not that far out of tolerance if you're at 4%. So I would say you could, if you really like that stock, you could just do that. On the other hand, you could go in with 3% and leave that little bit of cash as dry powder, since the markets are overvalued and aren't given any clear direction at this time. Either way is okay and fine. It's a guideline. It is not a strict rule, 3%. Just a guideline to keep you to have the diversification you need. If we didn't have a guideline, some people would go in with 7 and 10%. Some people would find a pet stock and be in there at 10% and reduce their diversification by 10% that way. So we want to make sure that we are helping you to take the highs and lows off this ride as we step by step systematically grow the wealth. Does that make sense?
It does. It doesn't.
Okay.
And that answer.
So there are tolerance limits.
Sure. Sure. But there is also some variability built into the system.
Right.
And I get that. So that answer actually somewhat guides the response to my other two questions. I am very overweight on 2 other sectors, but everything I have bought in there, it seems like a good play to me, even though on one sector, the ones that I have bought all have gone down some. It seems to me like, just given where the medium-term direction of our economy, they're going to do okay, and the numbers on the companies seem good. I suspect your answer is going to be similar. My sector weighting there is about 9% versus the suggested 5%, and then each stock is pretty even at a little under 2.5%.
Okay. It doesn't sound like you're too way off, but keep an eye on that. If when you start getting to a sector or an individual, let's start with the sector. If a sector gets way overbought and it's taken up 20%, 25% of your portfolio, you need to start trimming some things back. And usually you could dive into that sector, find your holdings that have gone through the ceiling, and prune those back, and that'll take care of it, and reinvest it in other areas. But in this case, it sounds like you have a few that actually have been coming down in price in that sector, which that happens occasionally. You could find more to put in there, but it sounds like you have way too many in there as it is. In that case, and this is just something to be thinking about, if you're taking a tax hit with Nvidia or a few other those stocks that went through the ceiling this year that we ended up selling because of BRI violations, you might want to think about selling off some of those weaker stocks in that sector that are overweighting it and getting that sector back down to where it should be.
This happens to be a qualified account, so the tax
so it's no issue there. Okay. Very good. All right. Well, very good. So it doesn't sound like you're too out of tolerance across the board. If it's supposed to be 7% and you're at 9%, take a look at it and see if there's any weaklings or areas in there that you think, this stock just hasn't performed and won't perform, and maybe it's an income stock, or maybe it's something in the gas and energy area that maybe it'll come back, but we could wait to get back into it. Go on and rebalance that sector down to make it work, to get it within line.
That's great. Stephen, it's kind of the thought that comes to my mind of if you're doing yard work and you've got those pesky branches that keep on growing, it's not a bad thing. It just requires a little bit of pruning. That's the beauty of having a portfolio that has stocks that grow like that. You have to prune them a little bit, and then sometimes, like Mark said, if you've got a big stock like Nvidia that you might have sold, and you got those other ones that haven't done as well, you can trim those and balance that out. It's a fun dance, right, Mark? It's a fun dance to play.
It is. But it sounds like you're thinking straight and thinking smart. It sounds like you have some good wisdom there. And as long as you keep investing with biblical integrity and keeping an eye on the portfolio so nothing gets too far out of tolerance, then I think you'll have a good night's sleep as you watch your portfolio step by step, growing steadily over the long term.
It's awesome. Good deal, Stephen?
Right. I do have one final question.
Sure.
How do I buy in this in this, actually preferreds are a significant component of the model. And I'm on E-Trade, and I don't have a method of buying preferred stocks here. So how do I do that?
Oh, well, that's a great question. So you're on E-Trade, and they don't have preferred. So maybe what we have to do is come up with a good ETF that's clean with preferreds in it for you. That way you could fill that allocation pretty easily. Let me look into that, okay? And I'll see what we can find, and maybe we'll put something on the buy list in the next week, realizing that there's a weakness there for those on E-Trade.
And
I'm going to make a note right now.
Okay.
I am too, Mark.
I will make a commitment of my own, and if I find that I spoke quickly, I will write I won't call back in, but I will write a note and say, now there's a way to do this. So I'll make that. Yeah. I'll do that return.
Well, the other thing is you could buy other income products in there to supplement for the preferreds if you don't have them available. Just a thought to cover it. If there's some areas, some REITs, some income areas, you could always use like the Timothy Plan fixed income fund to help offset that as well.
Okay.
Awesome.
Very good.
Stephen, thanks for the call, brother.
And thank you for caring so much about your portfolio. I think that shows good stewardship. Doesn't sound like you're bothered. It sounds like you just want to do it right, and that's wonderful. That pleases God, I'm sure. So continue with glorifying God with all you do, including your portfolio.
Absolutely. Hey, Linda, why don't you hang on for just a moment there? Because, Mark, I'm seeing a real interesting headline that I think is worth us talking about here with the time we have in this last segment. Sam, we did see, it looks like Trump did cut the fentanyl tariffs on China 10%. That's an interesting new development in this U.S.-China trade dance as we're seeing. What can you tell us here about this, Sam?
That is until China stabs us in the back again, right? But I won't go there yet. We'll just read what's going on. So President Trump says he's now reached a one-year agreement with China on rare earth supplies following his meeting with Xi Jinping. China had previously threatened export controls on these materials earlier this month. This also comes as China has been securing framework deals with other countries like Australia and Japan. That's been in an effort to cut China's stranglehold on the rare earth market, work around them, and using it as leverage against China. By the way, as you said, Trump also did cut those fentanyl-linked tariffs by half, bringing them down to 27%, while at the same time also announcing that China now plans to start buying, quote, tremendous amounts of soybeans, which has also been a leverage point for China up to this point.
You know, speaking of tremendous, Mark, I don't know if you heard this. In fact, I think you did because we were talking about it in the pre-show meeting. Trump did say something like, this was the greatest meeting he's ever had, and I've had a lot of meetings. And
I think the quote was, on a scale of 1 to 10, this meeting was a 12.
That's right. Classic Trump. What do you make of all that, Mark?
Well, I make the headlines just made me laugh. Trump cuts fentanyl tariffs. And the first thing that popped in my mind is, does that mean fentanyl is going to be cheaper in the U.S. now?
Yeah, exactly.
That's not so good.
I know what it really meant, the tariffs on China until they start getting their act together on stopping the export of fentanyl. But still, the way the media phrase that, it was just hilarious to me. It's all good stuff. We need to get trade with China. We need trade across the world. That's one of the things that made America great and will make America great again and continue to keep America great, is being the leader in trade around the world. And it looks like Trump is doing a fairly good job of reestablishing the respect and the trade we need with all nations, including China. So I'm comfortable with what I hear. Yeah. I'd like to see what happens now.
For sure. You know, Mark, I find it fascinating. We've likened this before when Sam and I used to talk about this, several months ago or so. This modern Cold War that we're seeing with China is different than the Cold War we saw with Russia for a number of reasons. The biggest one is we actually have, and like you said, we kind of need trade relations with China to stay open. With Russia, we were able to just kind of cut them off. With China, you need that trade relationship open, though. So there has to be some warmness in this Cold War, as it were. Am I stating that correctly, you think?
I would think in the short term, we need the trade with China.
Yeah.
If we just went cold turkey on it, our economy would collapse because, 90% of the products that are sold in America come from China right now. So until we reestablish our manufacturing and internal distribution, we're being held hostage by China. So, I would love to see it to where we don't need that, to where America is self-sufficient and can take care of itself. And if we had to cut it off, we could without it being a major impact. But until then, which Trump is trying to get done, until then, we should try and keep that open. Absolutely.
Yep.
Just for the average American.
Yeah. 610-363-1110. Folks, got a couple lines open. Hope you'll join the conversation. 610-363-1110. If you have to leave us, hope you have a great rest of the day. We got more financial issues, questions to answer. Linda, your call. A couple more things happening in the news world to get to. We want to hear from you, folks. Call in right now. 610-363-1110. We'll be right back after this break. Don't go anywhere.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant, and my family, they were like, no, you're not having this baby. I met Miss Linda. She told me about all the great resources, like they offer free baby clothes, they offer free classes, stuff for her mom. She prayed with me. She told me to ask God to, guide me to my decision. She made it completely like my choice. She offered to get me an ultrasound, and I found out I was 6 weeks pregnant. That's where I very first heard the heartbeat of my son, and I was sold. Whatever I gotta do, whatever comes my way, I'm just gonna, have this baby. It was really a great thing that I was led to the choice to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Queue your call up right now, folks, at 610-363-1110. 888-363-1110. Mark, we got a call coming from California this morning. I always get encouraged, Mark, when I see listeners calling from California because, I'm one of those guys who thinks, okay, there's certain states, certain regions of the country that seem to be much darker, but we have a remnant in California, man. It's awesome to see.
And there's a strong Christian contingency in California.
Very cool. A sleeping
Absolutely.
giant. Yeah. So, Linda, we appreciate you so much. Good morning. You're live on Financial Issues.
Hi. Good morning, Mark and Seth.
Good morning.
And good morning. I've been with FISM for about 6 or 7 years. I'm
Praise
71 years. Yes, I love it. And I'm 71 years old, and I'm not that. Didn't have any knowledge of the stock market or anything before I started listening to you guys. So I started investing. I've sold, some of the overweighted stocks and the tech stock that just came off of the, So I have a lot of cash. So I have half my money's in cash, $200,000, but then the other half is in still in the stock market. Okay. And I'm still trying to I'm still very slow in moving things around. So I'm with Morgan Stanley. I don't know how to do any other financial institute. And I live in a little tiny town, and Morgan Stanley is the nearest thing I have. They put all the money in a money market, their money market, at 4% interest. I'm concerned about that. I don't know if it's FDIC approved, and I need your suggestion. My broker is not a Christian, so I fight him all the time. I tell him this is not biblically responsible, and he just doesn't go along with everything. So it's a constant battle trying to make decisions and get things moved where they should be.
I'm sorry to hear that. My heart's breaking for you. I know there are Christian financial advisors in California. What part of California do you live in?
Right in the Central Valley, between Fresno and Bakersfield. And it's a little town in between.
Yeah, so it might be hard to find somebody, but you should still look. How could we expect somebody to give us wise advice when they don't understand who we are or what we are? They don't understand what is important to you. The very basics of a financial planner or an investment advisor is to know your client. There's actually rules in the rule books about this, that they have to know who you are, and they have to manage money in alignment with who you are so that it reflects who you are, where you're at in life, what you have financially, and what you're trying to do. It's not up to them to impose their ideas on you of what you should be investing in as far as, whether secular or not. In fact, I believe there's going to be a lot of lawsuits sometime soon by people who thought they were investing with biblical integrity, and their advisor put them in things that were involved in abortion, pornography, and things like that. So you should find somebody who understands your convictions to honoring God in all you do. That would be a Christian first and foremost, an active Christian, a wise elderly Christian is what I would say, somebody who really knows the word and can help you to invest in the same way you want to live your life, and that's with integrity to biblical principles. That's the big thing that jumped out at me. Now, the other thing on whether Morgan Stanley's money market is safe, usually when you're in a money market, it is covered with insurance against fraud and that kind of thing. It's not covered against loss, even though money markets, you would think, shouldn't lose money. It can, because it's invested into short-term government issues and things like that. But Morgan Stanley isn't any more at risk than anybody else's money market investing the same thing, unless they get outside the lines, which I don't think they will do, since they're big enough to know better, if you know what I mean, and they rely on the government to be buying and selling government bonds for and with them. So I don't see any risk there beyond the normal, could interest rates go down? What happens? Could we see, if the government ever defaults, then you have a problem. That's when you have a problem on it. The idea that you have 50% in cash, obviously flags go up right away. Why aren't you invested? Blah, 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 blah. But reality is, in this market right now, you're not trying to grow this to become a multi-billionaire on this. What your goal, I would assume, and you can correct me if I'm wrong, is to preserve and have enough coming out of it to help you with your lifestyle, to maintain your lifestyle. So preservation is a big part usually of those who enter their mid-60s, their mid-70s, and so on, is to preserve what God has created for you and utilize it to create income and to supplement your retirement and continue your lifestyle. If that's what you're trying to do, right now there's no rush to get into the market. You got a lot of dry powder there. If you go through the back end of the Partners Hub and you see some things you like in those areas, in those sectors that you don't have anything in, you might, a little bit at a time. Let's put 3% on this stock, and let's put 3% on that stock, and maybe start filling out a sector or two that have nothing in it at this point, that are good stocks, that are on our buy list, and that are very solid, made of metal, as we call it here. Is that helpful?
Yes, it's very helpful, because I've just been you said exactly what I'm doing. I'm trying to preserve. I don't want to lose it, and then I don't have the time to regain it. And my husband is 80, so we just don't have the time to recover it. And everything is so expensive in California.
My goodness, yes.
Yeah.
If we had to go into a retirement home, what we have saved actually wouldn't last us for very long. So that's what
So preserving's a good idea. Another thing is, talk to your broker about shopping CDs, short-term CDs for you across the U.S. That way you can lock in maybe 4% or more, depending on whether it's a 6 month or 12 months and the amount of money going to it. Don't put it all in one CD. You might ladder some, go into a 6 month, a 3 month, a 6 month, and a 12 month. And then when they come due, redo them over and over again. And that way you have that money working. But if the money market's paying as much as the CDs, don't worry about it right now.
Oh, okay.
And sleep well at night.
Because I'm always wondering, what is the rating? Sometimes he puts me in things that are riskier, that are just a BB or
so he's putting you in some bonds. He's putting you in some bonds, you want to be B or above, definitely, in any bonds you're getting in. If you're getting into AAAs and stuff, you're not going to get the yield you want, unfortunately, at this point. So I understand what he's doing. So I hope that helps. If you have more questions, please call in again. We have the Ag Report coming up, and we want to make sure that we give Craig all the time he needs on that.
Let's do this also. Linda, I'm going to put you on hold. If you have a follow-up, just because I can, Mark, and I'm sure you can tell us too, I can hear Linda's cry in her voice for help here. Linda, why don't we keep you on hold? If we have other questions, maybe we can get to you during the break here. So just hang on, Linda. You might not have any other questions, and if so, it's totally fine. But if you do, just stay there for a moment.
I love that idea.
Yeah.
Seth.
Awesome. Well, folks, for the rest of you, we've got Craig Haugaard coming with the Ag Report, and then more financial issues after the break as well. You're gonna want to hang with us. 610-363-1110. We'll be back.
This is Craig Haugaard with your Financial Issues Ag Update for October 30th. Well, corn was split with the nearby months higher and the deferred months lower in yesterday's trade. In the world of exports, the U.S. FOB values have widened their discount to FOB values posted for Brazil, giving a further edge to the U.S. in a general world market. As a result, we had December corn finishing 2 cents higher at $4.34 per bushel. For the soybean market, the center of attention remains the upcoming meeting between Presidents Trump and Xi Jinping. There was a strong rumor making the rounds yesterday in the market that China has bought 3 cargoes of soybeans to ship out of the Pacific Northwest for late this year or early in 2026. If so, those would be the first soybeans bought by China in the current marketing year. January beans finished today 0.75 cents lower at 10.94.5. Wheat found itself impacted by Chinese rumors, although the U.S. FOB values are starting to price us out of sub-business. Hard red winter wheat is $7 per metric ton over Russian FOB values and $20 per metric ton over Argentinian wheat. Minneapolis December wheat was 1.25 lower at 5.60.5. Kansas City rose by 2 3/4 cents, closing at 5.22 3/4, and Chicago was 3 1/4 cents stronger at 5.32 1/4. Cotton futures also benefited from the encouraging news on the Chinese situation. We had December futures ending the session 96 points higher as they closed at 66.01. Livestock futures were mixed. We had December live cattle $4, 32.5 cents higher at $230.90 per hundredweight. January feeder cattle rose by a very solid $9.15, ending the session at $334, 2.5 cents per hundred. And December lean hog futures a nickel lower at $80.77.5 per hundredweight. The rally in Class 3 milk futures seem to have stalled out. The question now is whether we will consolidate at this price level or retrace a portion of the recent up move. Yesterday we found the November futures closing a single point lower as they settled at 17.83. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity.
To find out how you can support the life-saving mission of preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Boy, folks, it's so great to get to speak with each of you. We were able to talk to Linda during that break there. And Mark, it just reminded me, I'm so thankful for Linda's heart to be biblically responsible. And also for the fact that this is this really is, it's just a conversation. So if you're nervous about calling in, just give us a call. We'd love to help you. 610-363-1110. Mark, I was so overjoyed to hear you talk with Linda in that break. And it's just a great reminder of your heart for BRI and your knowledge. It's awesome to get to listen to it every day, brother.
You know, it's the call-ins and the partners of Financial Issues is like, it's like nutrition to me. It's like vitamins. When I talk with somebody who loves the Lord and is trying to honor them in their investments and trying to do everything, looking for wisdom, it just, I don't know, it just builds me up. It gives me energy. It makes me feel good about life.
Yeah,
you know,
it's awesome.
So praise God. Thank you all for your desire to honor God in all you do.
For sure. 610-363-1110, folks. If you queue your call up right now, we'll probably be able to get you. We might be able to get one or two more calls if you queued it up here. Of course,
squeeze
tomorrow,
you in.
Yes, we'll squeeze you into the show here. Of course, tomorrow, if you don't feel like calling today, you can call tomorrow. Tomorrow, we're dedicated, most of our Friday show is questions. So we want to get to those calls right away. 610-363-1110. But why do tomorrow what you can do today? You still have time. So call us in. Mark, while we're waiting for that call here, let's get to a question from George. George is 76. And he says, hey, Mark, I considered buying a couple of holdings. He mentions them there, Mark, but the key about these holdings, they're on the buy list, but they're both foreign companies. Is what are the tax implications for owning stock in foreign companies?
Well, there can be implications, but the good news is, looking at the symbols that were in your question, you're good. There's no implications here. The short answer is both companies are fine to own in a qualified account or non-qualified, so you have no issues there. So I think a small exposure to international assets is a good idea. It's another way to diversify. When you think about it, that maybe the U.S. economy takes a turn that this country doesn't, or the dollar strengthens or weakens, all this can help your returns, or it could hurt your returns at some point, but it gives you a little more diversification. So I think it's a good idea to go ahead. Those two are clean. You shouldn't have any implications with that. No tax implications like the UBTI in an IRA, you won't have that there. I don't think there's any foreign tax on dividends from either of these two that I saw. So you should be great.
Awesome. No, that's great, Mark.
Thanks for the question and bringing it up, because a lot of people aren't sure if they should be going outside the U.S. anymore because of the craziness of the world. But
Absolutely.
I still think there's some great investments overseas as well.
Mark, speaking of the craziness of the world, I hate to even bring this up, but we have to bring up, unfortunately, the largest city in our country. Once a great city, New York City, is now at the risk of being held hostage by a Mohammedan communist dictator named Zohran Mamdani. It's looking like over 25% of New Yorkers will consider fleeing New York City if Zohran Mamdani wins. It could reshape the city. Sam, we've actually already been seeing this flight out of New York. We've been talking about it. Refugees is what you'd call them, are fleeing to Florida and Texas. Mark, what do you make of this here? I mean, this is crazy stuff.
The New York City refugees.
Yeah, that's right.
Now, it isn't really crazy. I get it. I think if I lived in New York City and we ended up with a mayor that was a communist or a socialist, or at the very least just lying through his teeth about everything he's saying because he won't say anything directly or specific.
Well, you think, Mark, he would have to be, right? Because he holds so many beliefs that are in conflict with each other. Yeah. He's a Muslim, but he's pro-LGBT and he's socialist. It doesn't all really fit together, right?
Yeah, so, I think if you look at the Muslim countries...
There's one exception here. Each of those ideologies hates Christianity. That's the one common theme, right, Mark? Each of them hates Christianity.
Exactly.
Yeah.
Exactly. And this is the way they got into Europe and got into the government in England and elsewhere, is they lied. And there's actually part of the Quran that tells them it's okay to do that, to pretend you're somebody else until you get into power and then implement your Muslim faith and impose it on everybody. So we want to be careful with people like that who won't answer a question straight, who conflicts their ideas. For example, name a Muslim country that lifts up and appreciates the LGBTQ community and doesn't throw them off the roof, or
as soon as I find one, Mark, I'll let you know.
Yeah, exactly. Right. So we know there's something wrong there. But going back to them leaving. Yeah, I would leave too if I was them, but at the same time, I'm holding out hope. I'm thinking there's a lot of Democrats who are hearing all about this for the first time, are finally waking up with this election coming up, and may just vote in somebody else, maybe a lesser evil, or who knows, even the Republican candidate might win because of the disarray of the Democratic Party over there. But if he does get in, it's going to be terrible.
You know, Mark, I saw that a couple weeks ago, Mamdani was leading Cuomo by 20 points. I think that's now narrowed to 10 points. That's still a significant gap, but that is moving in the right direction. Weird to say that's the right direction if we're moving towards Cuomo, but still.
Yeah.
Well, yeah, it's better. You put something bad next to something worse, and bad looks good.
Yeah. Absolutely. And that is so much of what politics is, guys, isn't it? It's the lesser of two evils, and praying that God and his grace would do good through the evil that is not as evil as the evil that could be. Interesting stuff for sure.
And I don't want to get too political, but what keeps going through my head and actually gives me a headache at times is, why don't we have a strong Republican candidate there?
Oh, yeah.
Why didn't we get behind somebody there? I mean, even the Republican candidate we have, you never hear from him or hear about him. He doesn't have the monies that everybody else has. Why? I mean, I guess they don't want to throw money after it, believing that he won't get elected. But we had Republican mayors in New York before.
Yeah. Yeah.
So
absolutely.
Yeah.
Well, Mark, 610-363-1110. We do have a call here in the queue. Ken is calling from, I apologize, Ken. I believe that's Arkansas. You'll have to forgive me if I got your state abbreviation wrong. Ken, good morning, brother. You're live on Financial Issues.
Yeah, it's Arkansas.
Awesome.
Sometimes people think it's Alaska. But
that was my fear. I was like, is it Alaska or Arkansas? Glad to hear from you, brother. What's on your mind?
This question I probably should have called earlier. Hey, I'm 67. I've got a couple of retirements. I am not drawing on any of my investments. And I love the new tracker because I can sort things by dividends that it's paying. And my habit has been always to reinvest since I'm not drawing on anything.
Very good.
And out of 54 holdings that we hold, there are probably 12 that pay no dividends. Should I be looking around to shed those for something on the buy list as time rolls along for something paying dividends with looking towards retirement?
That's a good question. Everything doesn't have to pay dividends. We need a little growth in there, but you can have growth and dividends. So maybe something that's not paying, a lot of growth stocks that do pay dividends. The dividends are less than 2%, so oftentimes less than 1%. But you could find some of the stocks in the buy list that would do that for you, give you a little growth. Remember, the dividends themselves usually won't keep up with inflation and taxes. So when you do that, you might want to keep a little growth in the portfolio and to keep up with inflation and taxes. Just a thought. I wouldn't overreact to that. You said you had about 50 different holdings. That's about 20 more holdings than our average person should have in their portfolio. I'm not saying that you're over-diversified because they might be in the same sector and filling out that sector, just smaller amounts in the original 3%. Maybe they're at 2 or 1%. So that might not be so bad. But what would be good is looking at those in there that you have, the ones that were on a buy list once and maybe they're on a hold list now, and finding the weakest ones and maybe moving that money to something better like you were talking about. Maybe there are some more stocks in there that pay a dividend that you would like, and that way you're weeding yourself of some of the weaker in your portfolio and strengthening it up a little bit. How does that sound as a direction to go?
Well, that sounds like it just complicated my life.
Well, I didn't mean to do that.
I thought that 54 because mostly I've got like 3 or 4 holdings in each sector.
Okay. So, well, go out to the Partners Hub. Go into the not the asset allocation, but the where the bar chart is. Seth.
Yep, the portfolio tracker, Ken. Yep.
Portfolio tracker. And scroll down, and it'll show you where you're overbought in some of the sectors and where you're underbought, and that'll help you to see where to move the money to. Did that make sense?
And I'm pretty close to being on the on being level on the allocation chart.
Well, then praise God.
I just have too many holdings. I don't know.
Well, it's not too many. It's not too many, but it feels like too many since the norm would be about 30 to 35. But but if it's working for you, it's great. I would try and find the ones that haven't done well for you, maybe replace them or move the money to some of the smaller holdings that you have in there. Thanks for your call, Ken. I really appreciate it. As you can tell by the music, we're down to the last few minutes here. So please call in again. I appreciate you, and I appreciate you calling in. You know, we appreciate all our partners. Don't forget about the Nvidia petition. And thank you so much for being with us today. And thank you for loving God, honoring Him by the way you invest. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.